Hello, this is Japanese Economic Review Channel. Today, we'll examine the Japanese service sector's momentum, focusing on the highly anticipated January 2026 rebound. As you can see, the overall index of tertiary industry activity rose to 106.3, marking a significant month-over-month increase of 1.7%. This presentation will unpack the underlying forces driving this resurgence. This 1.7% MOM surge is critical because it definitively breaks a 3-month stagnation period. Furthermore, the original index shows a 1.5% year-over-year increase, marking 22 consecutive months of growth. The official METI assessment appropriately notes that while some pausing is seen, the overall tertiary industry activity shows a clear pickup movement. Looking at the long-term trend from 2021, the market clearly entered a pausing phase in the fourth quarter of 2025. However, the January 2026 data shows a sharp upward inflection. This decisive rebound suggests that the underlying economic engine remains resilient, overcoming the recent plateau to resume its upward trajectory. A key takeaway is the structural divergence between B2B and B2C sectors. Broad-ranging business services surged by 2.6% MOM, outstripping personal services, which grew by only 1.0%. This indicates that corporate investment and business activities are the primary engines of this recovery, while consumer spending shows a more modest improvement. What exactly drove this 1.7% growth? The heavy lifting was done by information and communications, retail trade, and finance and insurance. These three sectors combined contributed the vast majority of the upward momentum. Conversely, living and amusement-related services and real estate acted as slight drags on the overall index. This bubble chart visually reinforces our findings. Notice the dominant positioning of retail trade and info and communications in the upper right quadrant. Their massive economic weights, combined with MOM growth rates exceeding 4%, generate an outsized macroeconomic impact. Meanwhile, living and amusement lags noticeably in the negative territory. Here we see the primary micro-drivers. The expansion is highly concentrated in digital and financial infrastructure, alongside specific retail segments. In stark contrast, physical amusement and individual auto maintenance experienced significant contractions. This highlights a fundamentally uneven recovery across different segments of the economy. Zooming in on the information sector, which holds a massive weight of 1,157.1, we see a 4.0% jump. This was primarily fueled by a 7.3% spike in information services and a 2.9% rise in services incidental to the internet. This structural movement underscores the ongoing digital transformation within corporate Japan. The retail sector's impressive 4.8% growth masks an anomaly. While food and beverage retail rose a healthy 3.8%, motor vehicle retail exploded with an atypical 13.1% MOM expansion. This double-digit spike served as the core catalyst for the physical retail recovery, highlighting a concentrated burst in consumer durable goods purchasing. Similarly, the finance and insurance sector's 3.9% overall growth was driven by extreme volatility in specific areas. Financial products and futures commodity transaction dealers witnessed a massive 17.5% surge. This intense, concentrated trading activity injected significant momentum into the national index. On the downside, living and amusement services dropped by 2.0%, becoming the primary drag. This was driven by a 5.0% decline in amusement services and an 8.1% plunge in individual auto maintenance. Note the fascinating divergence. While consumers bought cars at a record pace, spending on maintaining existing vehicles plummeted. This heat map tracks the 12-month momentum. You can clearly see the transition from mixed and contracting conditions in late 2025 to the broad expansion, indicated by the forest green blocks in January 2026 for tech, finance, and retail. However, the persistence of red in living and amusement warns of lingering weaknesses. In synthesis, the 1.7% headline growth masks a bifurcated environment. Structural momentum is localized in B2B, technological and financial infrastructure. Personal consumption, meanwhile, relies heavily on isolated spikes, like auto sales, to offset broader contractions in lifestyle spending. It is a recovery of distinct winners and laggards. To conclude, the official METI outlook points to a, quote, pickup movement, with some pausing. We have confirmed a trend reversal, breaking the 3-month stagnation. Corporate B2B services are leading the charge, but consumer volatility remains. Monitoring whether broad-based personal consumption can catch up to B2B growth will be crucial moving forward. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.